Building your credit, tips and tricks. Paying credit card bills on time. Do you know how important your payment history actually is? Paying your credit card bills on time, also known as your payment history, is worth about 35% of your credit score. Starting with the initial 6-month period and going backwards, your history is crucial. If you've got no history at all, it's important to find a way to create some by paying a bill with your card. If you can't pay that bill off, however, don't put yourself into debt. Only use this method if you can pay off the card every month, so you can get updated information to your report. Plus, you don't have to worry about interest if you pay off the bill each month. Don't miss your payments. Unfortunately, some people tend to fall into a bad habit, paying bills late, but you can improve. If you missed a payment 6 months ago, it's going to count more than if you missed a payment 3 years ago. Your FICO scores will continue to increase and to improve as you move forward. The improvements to your FICO score will improve your information overall. Should you shut it down? It's important to have a long history of credit use to increase your record and your FICO score. You probably didn't realize just how important that first card really was, but responsible card use is crucial. If you find yourself opening and closing cards frequently, it can cause big problems. Instead, keep a single card as long as you can and use just that card. Your average credit age is an important part of the credit score, giving you about 15% of your FICO score. When you open or close an account, it changes your credit history age, and that brings down this portion of the score. Don't overspend. The higher the balance that you have on your credit card, the worse it's going to look for your FICO score. Keeping your balance down to 30% or less of what your total available is will help you overall, even if you're not paying it off every month. Balances that are higher will start to decrease your score. If you want your credit card to help you along the way and improve your score, it's crucial to keep this in mind. Quality over quantity. Having more than one credit card isn't necessary, whether they're store, general, or even gas cards. More and more credit cards will actually make you look worse to credit reports. Unfortunately, it can be difficult for some to refuse the discounts offered with store cards. Even still, you may want to avoid them entirely. A store card will typically have a high level of interest, and since most people tend not to pay off their credit cards every month, they know they're going to get a lot of money out of you. After all, it's difficult to avoid spending money when there's something special going on. When you get a better credit card, you can keep lower interest rates, low limits, and even no fees. You can even get bonus points if the card you have that does all these things also gives you some kind of cash back. Don't forget your payments. Remember how we talked about payment history? Well, it's crucial that you take advantage of bank reminders if your institution offers them. Whether it's emails or texts or anything else, having reminders, or better yet, automatic payments, will make a huge difference. Keeping your payments on time will make a dramatic difference on your credit report. Just make sure you pay more than the minimum. Request a credit limit increase. Okay, so you're making your payments on time, you're spending less, you owe less, and you're starting to build your way up. Now it's time to start thinking about an increase for your credit card. Remember that your credit utilization is about how much you spend versus how much you have available. By keeping your score down to no more than 30%, you'll be able to improve your score. If you've got $10,000 of credit available and you've spent $2,000, it means your utilization is at 20%, which is good overall. But increasing your limit can make your ratio even lower. Start secured. What if you have bad credit and you aren't able to just apply for any old credit card? That's when you can consider a secured card. The first thing to think about is how much money you're willing to deposit into your account in order to get your credit card. With a secured card, you have to leave that money alone because it gives the card issuer something to take in case you don't pay your bill. You likely need to have the money in an account with that card issuer, or in an account they can access one way or another. Fortunately, you may be able to get some type of interest from the deposit. Not paying your bill, however, means that your money will be seized and the bank won't have a problem doing so. People with bad credit, after all, are expected to continue to do the same again and again. If you need to rebuild your credit and you can't get a regular card, then look for a secured credit that will get you on the right path. How long does it take to build credit? Of course, you may be thinking about just how long this is all going to take. Unfortunately, it's not going to be a super quick process. Your credit history builds over time, and it will only continue to go up if you continue to do all of the things we've discussed here. Making your accounts current is the first step, and it can take at least a few months of reporting to get this to reflect. Paying bills on time is the next step, and then making sure you don't use too much of your balance and do use your cards the way they're supposed to be used. If you do, you'll be on your way to better credit. That's it for now. On our website, you can find more posts as well as calculators and other financial tools. Looking to build a credit with your credit card? We would love to know your thoughts, so feel free to share them with us in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel on YouTube to get more free financial educative videos.